If one of you earns a big salary and the other earns almost nothing, Australia's tax system is quietly working against you. Because spouses are taxed individually, a couple on $200,000 and $20,000 pays far more tax than a couple splitting the exact same total evenly, and almost nobody realises it's happening. This hits hundreds of thousands of single breadwinner households across the country, and the cost stacks up fast. Today, we fix it with 3 moves. Check your household's bracket exposure, claim the government co-contribution, and use the spouse contribution offset. Here's the number that should make you angry. About $270,000. That's the extra tax and missed super a typical Australian couple can give up over a career by keeping one spouse on $200,000 and the other on $20,000 based on 2024-25 Money Smart brackets and ATO super thresholds. But here's the part nobody tells you. Most of it is avoidable. 3 moves, all free. Check your brackets, claim the $500 co-contribution, and use the spouse offset. Each one takes under 20 minutes. Australia's tax system is strictly individual. Each person is taxed on their own income, married or not, according to major tax guides. There's no marriage allowance and no joint return. So when one spouse earns far more, the progressive brackets push them deep into the 37 and 45% bands, while the other's tax-free threshold sits unused. Run the numbers on a household earning $220,000. On a $200,000 salary, the top dollars are taxed at 45%. Money Smart, 2024-25. Split that same income to $110,000 each, and both spouses stay fully inside the 30% band, never touching 37 or 45% at all. The trap doesn't stop at salary. Several superannuation perks only switch on when the lower earning spouse stays under specific income limits, according to ATO super rules. The government co-contribution and the spouse contribution offset both depend purely on that one partner's income, and most couples never set their contributions up to capture them. Here's the cost of doing nothing. If the lower earner is under $47,488 but never contributes, they forfeit a $500 co-contribution. And with income under $37,000, the higher earner skips up to $540 in spouse offset ATO. That's up to $1,040 of free money walking out the door every single year. Here's the belief that blocks everyone, that being married gives you a tax break because the ATO looks at combined income. The fact, according to the Tax Office and major tax guides, is that Australia taxes individuals, not couples. No marriage allowance, no joint filing, just your own income. Put the two costs side by side, roughly $8,850 a year in extra income tax. Money Smart 2024-25. Plus up to $1,040 in missed super benefits, ATO. Compound that across a career and you reach $250,000. Meet Emma, 42, a marketing manager in Melbourne earning $200,000. Her partner Liam, 44, works part-time in retail on $20,000, with 23 years until they hit 65. On paper they look comfortable, but Emma decided to actually check the numbers. First discovery. They're donating nearly $9,000 in tax every year. Emma pays $56,138. Liam pays $288 for $56,426 combined. Money Smart 2024-25. Split evenly at $110,000 each. They'd pay just $47,576, a gap of $8,850. Second discovery. A decade of free super they never claimed. Because Liam earns under $47,488, a $1,000 contribution would have unlocked a $500 government co-contribution, ATO. Over 10 years of never contributing, that's $5,000 in top-ups gone, before you even count the compounding. Third discovery is the one that stung most. With Liam's income under $37,000, Emma could have contributed $3,000 to his super each year and claimed up to $540 in spouse offset, ATO. Over the same decade, that's $5,400 in pure tax savings she simply left on the table. Add it all up, and Emma and Liam's spouse income tax trap cost them on the order of $270,000. That's roughly $203,000 in extra income tax, $24,000 in missed super benefits, plus tens of thousands in lost compounding. Money Smart and ATO modelled. So could this be you? Sign 1. One of you earns over $135,000 while the other earns under $40,000. Sign 2. You've never made a $1,000 contribution to the lower earners super. Sign 3. You assumed being a couple gave you a tax break. If any of those ring true, the next 3 moves are for you. 3 moves. Let's do them. And every one of these is free and takes under 20 minutes. Move 1. Check your household's bracket exposure. Open the Money Smart income tax table, find each spouse's marginal rate on their last dollar earned, and ask how many of those dollars sit in the 37 or 45% bands. That's the income you want to shift back toward 30% over time. 3 quick steps. Open the Money Smart income tax table, find each spouse's marginal rate, and flag any income taxed at 37 or 45%. What good looks like? Both of you under $135,000, everything taxed at 30% or less. Move 2. Claim the $500 government co-contribution. If the lower earning spouse's income is under $47,488, a $1,000 after-tax contribution before June 30th unlocks a $500 top-up paid straight into their super at tax time. This is general information, not personal advice. 3 steps. Confirm the spouse's income is under $47,488 in ATO online, contribute $1,000 to their super before June 30th, and lodge the return. What good looks like? $500 landing in their super every eligible year. Move 3. Use the spouse contribution offset. If your spouse earns under $37,000, tapering to $40,000, a $3,000 contribution to their super can earn you a tax offset of up to $540 on your own return, ATO. 3 steps. Confirm spouse income is below $37,000, make a $3,000 spouse contribution into their super, then claim the offset on your tax return. What good looks like? Up to $540 knocked off your tax bill each eligible year. Why now? In 2024, the new Stage 3 brackets came into force, and they still apply to each spouse individually. In 2025, the co-contribution income limit sits at $47,488, so confirm before you contribute, and every June 30th is a hard deadline. Contributions must clear before year-end to count. Each year you skip is a co-contribution and an offset you can never claim back. After you act, verify it worked. You should see the $500 co-contribution land in the super account. Confirm your notice of assessment shows the spouse offset applied, and if the lower earner's income climbs above $40,000, the offset drops away. So recheck it every year. Everything here comes from Money Smart's published tax rates and the ATO's super contribution rules, plus the tax guides we leaned on. All the links are in the description below. So today you learned why uneven couple income is taxed harder and how to claw back the super you're owed. Next week, the franking credit trick that quietly funds your spouse's super. If this saved you even 1 year of missed offsets, subscribe. We read the fine print so you don't have to, and there's a new money trap pulled apart every week.